There is a single piece of paper sitting at your mortgage company right now that can lower your monthly payment by $500 permanently for a fee of about $250. You keep your interest rate, you keep your same loan. And I promise you, nobody at that bank is ever going to pick up the phone and tell you it exists. It's called a mortgage recast. And today I'm going to walk you through exactly how it works with real numbers you can follow. A $400,000 loan, a lump sum of cash, and a required payment that drops from about $2,500 a month down to just under $2,000. But before we get there, I'm also going to show you the trap that catches almost everybody first. A move that feels completely responsible, feels smart, feels like exactly the right thing to do with your money, and changes absolutely nothing about your monthly bill. People hand the bank $80,000 and watch their payment not move a single penny. I don't want that to be you. I'm Ray Calloway. For nearly 30 years, I sat on the inside of the financial world. And if there's one thing I learned, it's that the most expensive mistakes aren't the reckless ones. They're the responsible-looking ones. The moves that feel smart in the moment because nobody ever showed you the better version. And this is one of the cleanest examples I've ever come across. So stick with me all the way to the end because after I show you the recast, I'm going to give you the pro move. The one that gets you the lower payment and the fast payoff at the same time. Most people never even realize you can have both. Now, one honest word before we touch a single number. This video is education, not personal financial advice for your exact situation. Your loan, your servicer, and your numbers all change the answer. So you'll want to check your own paperwork before you move real money. Fair enough? Good. Let's build this thing, right? Let me tell you about a man I'll call Dennis because his story is the reason I finally sat down to make this video. Dennis was 61, about to retire, and he'd just sold a rental property he'd owned for years, walked away with a little over $80,000 in cash. Smart, careful guy, did everything by the book his whole life. And the first thing he did was take that $80,000 and send it straight to his mortgage company, marked apply to principal, feeling like he'd just done something wonderful for his future. And he had knocked years off his loan. But when he called me a month later, he was baffled. Ray, he said, I sent them 80 grand and my payment didn't drop a single dollar. What did I do wrong? And I had to tell him the truth. He didn't do anything wrong, exactly. He just did the responsible looking thing instead of the smart thing, because nobody had ever told him there was a smarter one. By the end of our conversation, we'd fixed it, and his payment dropped by more than $500 a month. Same 80,000, same loan. He just needed to know one word. And that's what I'm going to give you today. Here's who this video is really for. You're sitting on a lump of cash. Maybe you just sold a house and the proceeds are parked in your savings account. Maybe an inheritance landed. Maybe you finally got a real bonus, or you sold a business, or a CD came due. And meanwhile, that mortgage payment shows up every single month and feels heavier than it used to. But here's the line you have drawn in the sand, and it's a smart one. You refuse to refinance, because refinancing means trading away the interest rate you've got. And if you locked in something low a few years back, you know better than to give that up. If that's you, the next 15 minutes might genuinely be worth $540 a month. So let's set the stage with clean numbers. Say you've got a loan for $400,000, a 30-year fixed at 6.5%. Your principal and interest payment is about $2,528 a month. Now fast forward 5 years. You've made 60 payments and the balance has slowly ground its way down to around $374,000. And that payment still shows up every month right on schedule, and lately it just feels heavier than it used to. So you do the thing that feels obvious, the responsible thing. You take $80,000 of that cash sitting in savings, you send it to your mortgage company, and you mark it apply to principal. And it works, sort of. The balance drops from $374,000 down to $294,000. In one single afternoon, you just erased years off this loan. You feel fantastic. You did the grown-up thing. Then next month's statement arrives, and your required payment is still $2,528, the exact same number, to the penny. You handed the bank $80,000 of your hard-earned savings, and your monthly bill did not move one single inch. And here is what nobody at the bank volunteers when they happily cash your check. An extra principal payment does not lower your monthly payment. Not a big one, not a small one, not ever. All it does is shorten the tail end of the loan. You'll finish paying it off sooner, someday, way out in the future. But between now and that faraway day, the bank still wants the exact same amount from you every single month. Your 80 grand is now locked inside the walls of your house, and your monthly budget is every bit as tight as it was the day before. That is the trap. It feels like progress, and in one narrow sense it is, but it did absolutely nothing for the bill that's actually squeezing you every month. Now, before you say it, yes, there's the obvious fix. The one every loan officer in America is delighted to talk to you about: a refinance. Hold that thought, because in a minute I'm going to put a price tag on it, and it is ugly. Because here's the move your lender doesn't advertise. It's called a recast, and it's almost embarrassingly simple. Same loan, same rates, same lender. For a flat one-time fee, let's call it around $250 bars, your servicer takes your new lower balance, that $294,000, and simply respreads it over the years you have left on the loan at the exact same interest rate. They just rerun the math on a smaller number. And that new required payment now comes out to about $1,988 a month. Let that land for a second. Your payment just fell from $2,500 to just under $2,000. That is roughly $540 back in your pocket every single month for the rest of the loan, without touching your interest rate at all. It's your lump sum finally actually showing up in your monthly bill for about the price of a nice dinner for two. So let me tell you exactly what a recast is and what it isn't, because this is where the magic stops being magic and starts being simple paperwork. A recast is not a new loan. There's no new appraisal. There's no credit check. Nobody pulls your credit score. Nobody asks for your income. Nobody wants your tax returns or your W-2s or 2 months of bank statements. You simply call your servicer. That's the company you actually send your payment to each month. And you tell them you'd like to recast your mortgage. You send them the lump sum. You sign a form and you pay the small fee. That is the entire show. For a lot of people who dread anything involving the bank, this one is refreshingly painless. But it does come with rules, and you need to hear them clearly, because not every loan gets to do this. Rule number 1, and this is the big one that settles the whole question for a lot of people. Recasting is mostly a conventional loan feature. If your mortgage is backed by Fannie Mae or Freddie Mac, which most regular conventional mortgages are, you can generally recast. But FHA loans, VA loans, and USDA loans generally cannot be recast. That's a firm rule, not a maybe. So the very first question to ask your servicer is simply, what kind of loan do I have? And does it allow a recast? If you've got an FHA or VA loan, this particular door is likely closed, though it never hurts to ask. Rule number 2, there's a minimum lump sum. Most servicers want to see at least $5,000 to $10,000 going toward principal before they'll run a recast for you. Some want more. In our example, the $80,000 clears that bar with room to spare. And rule number 3, hear this one clearly, because it's where people get confused. A recast does not change your interest rate, and it does not change your payoff date. You are still on the exact same clock, finishing at the exact same time. The only thing that changes is that your required monthly payment drops. That's it. That's the whole trade. Now let me come back to that refinance I told you to hold on to, because I promised you the price tag, and here it is. Yes, a refinance also lowers your payment, but look at what it costs you to get there. Closing costs on a refinance typically run somewhere from $3,000 to $6,000, sometimes more, a brand new appraisal, new title work, an entirely new loan, and weeks of underwriting where they pick apart your finances. And then the part that should stop you cold, a refinance throws away your old interest rate and hands you today's rate instead. If you're holding an older, lower rate CRC, the kind a lot of folks locked in a few years ago, that rate is the single most valuable thing about your whole loan. Paying thousands of dollars to lose the one rate you swore you'd never give up isn't a solution. That's a downgrade with a fee attached. So put the two side by side, because honestly, the comparison is almost unfair. The refinance, $3,000 to $6,000, a whole new loan, and your good rate is gone forever. The recast, about $250, the same loan you already have, one form, one phone call, and your rate doesn't move an inch. This is exactly why people who are holding those older, lower rates absolutely love the recast. It is the only tool that lowers your payment without touching the one thing you're trying so hard to protect. Now here's the pro move. The thing I'd lean across the desk and tell you if you were sitting right in front of me, After your recast, your new required payment is $19.88. But here's what nobody points out. Nobody said that's all you're allowed to pay. So keep paying the old payment. Keep sending that same $2,500 you were already living with just fine. Watch what that does. Your required payment covers the loan, and the extra $540 now goes straight at the principal every single month, which means you keep almost the exact same payoff speed you had before. Same finish line, nothing lost. But now, this is the part that really matters, and it's the whole reason I love this move. That low payment is now your safety floor. If life ever gets tight, a job change, a big medical bill, one rough year, you simply drop back down to the lower required payment. No phone call, no asking permission, no penalty. Think about that. Before the recast, the bank demanded the full $2,500 every month, no matter how far ahead you'd paid. Remember, that $80,000 prepayment bought you zero flexibility. Now, the worst month of your life cost you $540 less. You built yourself an escape hatch, and it cost you $250. Now, let me speak directly to those of you who are retired or close to it, because this move is especially powerful for you, and here's why. When you're living on a fixed income, Social Security, a pension, withdrawals from your savings, your monthly cash flow is everything. It's the whole ball game. You're not worried about impressing anybody or paying the loan off in record time. What you need is breathing room month after month for the rest of your life. And that is exactly what a recast delivers. It takes a pile of cash that was doing nothing for your monthly budget and turns it into $500 of guaranteed breathing room every single month. For a retiree, that can be the difference between a budget that feels tight and one that finally feels comfortable. And you did it without gambling on the market, without giving up your low rate, and without taking on a single dollar of new risk. That's about as safe and as smart as financial moves get. So here are your three doors laid out plain. Door one, extra principal, no recast. Fastest payoff, but zero relief on your monthly bill. That's the trap most people walk into. Door two, recast alone, real monthly relief, same payoff date. Door three, recast and then keep paying the old amount. That's the same fast payoff with an escape hatch built right in. Same money, same house, but one version of you has options and the other one doesn't. Now, let me be just as honest about when you should not do this, because a recast is a tool, not a magic trick, and I'm not here to sell you anything. If your loan is FHA or VA, this door is generally closed. Ask anyway, but don't get your hopes up. If you don't actually have a lump sum sitting there, there's nothing to recast. And please, do not drain your emergency fund to manufacture one. That cushion outranks a lower mortgage payment every single day of the week. If you're carrying credit card debt at 18 or 20% interest, that lump sum has a far more important job to do first. Killing your most expensive debt always comes before shrinking your cheapest, and a mortgage is almost always the cheapest debt you'll ever have. And one more genuinely important note. A recast lowers your payment, but it does not make the loan cheaper overall. If you recast and then only ever pay the new lower minimum, that smaller balance gets stretched across all the remaining years, and you can actually end up paying a little more total interest over time than if you'd made the prepayment and left your payment alone. Which is exactly why the pro move, recast to set the floor, then keep paying the old amount, is the version I keep coming back to. It hands you the flexibility without quietly costing you more in the long run. So here's the whole thing in one breath. Sending a lump sum to principal by itself does nothing for your monthly payment. A refinance costs thousands and takes your good rate with it. A recast for about $250 reruns the math on your new balance and hands you back roughly $540 a month without ever touching your rate. And the pro move stacks it. Recast to build your safety floor, then keep paying the old number to keep your speed. Lower payment when you need it, fast payoff when you don't. And remember, this is education, not personalized advice. Your loan, your servicer, your specific numbers will all shape the real answer for you, so check your own paperwork and call your servicer before you move any real money. The one question that starts it all is simple. I have a conventional loan and a lump sum. Can I recast? What's the fee and what's the minimum? That one phone call could be worth hundreds of dollars a month for the rest of your loan. If you had no idea this option existed, and honestly, almost nobody does, do me a favor and hit that subscribe button on your way out. Every week, I break down another one of these quiet money moves the banks and the agencies never bother to mention, the ones that keep real money in the pockets of regular, hardworking people. I'm Ray Calloway, and I thank you kindly for watching. Now go check what kind of loan you've got.